So very good morning to all of you, and thank you for making it in good time. As Naveen said, we are realizing that Mumbai is not just a late night drink city, what people can sometimes make for breakfast here. Uh, I'm actually, we are honored to have Tim Draper here with us. Very unique things from what I read up about him. And I must say that before we started Avendus in 99, the only international venture capital firm I heard of was Draper.
That was my father.
That's your father,
Yeah.
yeah. And interestingly, I mean, I think probably if you see the history of your family and the history of venture capital in Silicon Valley, they are very, very intensely correlated on when it was started and when it came to. But, Draper has been an investor in some of the highest quality companies, Tesla, SpaceX, Bitcoin, as a Baidu, Skype, DocuSign. So lot of interesting companies. I was looking at, like, there's some 137 exits, which is probably 3 to 4x of what any Indian venture capital fund has been able to achieve. So spectacular kind of movement, and now also started the Draper University, which I was in a call in a discussion earlier with Tim. I was discussing, and I would probably have him give some inputs on, is our entrepreneurs born or are they trained, right? A big question. It's like pretty much like leadership. Can you create entrepreneurs? Can you train entrepreneurs? What can you do? So maybe that will be a question for Tim about the university. But Tim is here to do, and he's chosen India and a few cities in India for Meet the Drapers TV shoot, and identifying very high quality entrepreneurs who can be a part of that. And they're going to go pretty much hop to different cities, the key kind of hubs of technology and venture capital in India, and shoot that. And a part of that is today, once our session is over and once the shoot starts, it is going to be that. So it'll be wonderful to watch that. Shark Tank has been a revolution in India. Like, it's taken venture capital to an area. There was a point of time when
we have $1 million investment award at the end, and we actually make the deal.
Awesome.
It's a little different from Shark.
Awesome, of course. No, but I must tell you how these. I don't know the intricacies of what they do at Shark Tank, but I know for sure that if you were a startup founder in late 90s and early 2000s, it was very difficult to find someone to marry you. Because people felt that, it's so risky and it's much better to be part of a job in a multinational. But how things have changed in the last 2 decades, and now with this revolution having touched homes, and Apoorva is here and he's lived to that. So I think, and you're also an investor in India. You've kind of looked at both from an LP perspective and as a direct investor. So we'll have a lot to talk about, Tim. Thank you very much for being here with us, and a big thanks from TiE Mumbai.
It's a great pleasure to be here, and I've got to tell my first TiE story. And it was just as TiE was getting going. It was like, I think this was their first gathering. And I've forgotten his name now. That first president of TiE. Do you remember who that was?
Was Kanwal or no? Out here? Suhas Patel?
Suhas Patel, maybe. And he came to me and he goes, "Hey, Tim, would you come speak to some of my friends? We're going to have this little gathering." And I said, "Sure." So I was expecting to go, to a little house with 3 or 4 people, and I got there, and he said, "Oh, you get on stage," and I looked out, and there were 750 entrepreneurs, and after I spoke, I walked away with 65 business plans. And that was, now that happens to me all the time now, but back then that was just unbelievable. And I thought, whoa, there is something going on here in India, because that TiE Indus group was going to be really a force in the Silicon Valley, and that has been the case. We've had great success with Indian entrepreneurs, so it's fun to be here. You feel the groundswell happening in India. It's fantastic. Great to be here, and we're getting a full cultural experience, not just filming of Meet the Drapers, but I learned breathing techniques, I did yoga, I did the meditation, I had a chakra, I didn't even know what it was. I still don't. And I have had really an extraordinary experience already, and I've been to India I think 3 or 4 times before, and at least 2, yeah, 3 before this. But we're really sort of, pouring ourselves into India, and really excited to be here. So thank you for having me on the panel.
Super. So the way we've kind of structured this discussion is that we're going to have about 40 to 45 minutes of a chat with the panelists here, ask a wide ranging kind of list of topics, and then we'll open it up to the audience. I will certainly not be able to cover most questions, so I'm sure you have a lot of questions to the panelists here, to Tim and to Apoorva and Avi. So we'll open it up in in about 45 minutes from now. Let me first start with something which is on top of everyone's mind for the last 2 weeks. They're saying
I can guess.
I know
it's my trip to India. It's the Meet the Drapers filming.
I hope it's not because you wanted to escape the US and someone just sent me a clipping.
Kind of ironic timing, isn't it?
Yeah. There's someone
I'm as far away from the US as I could possibly be.
There's someone who sent me an interesting clip about a company coming up with a 4-year cruise of you can avoid the regime altogether by taking a cruise for 4 years and then showing up back in the US. But anyways, I think the key question is that what we had an event like this a couple of weeks back with a law firm from Washington, and it was a very close contest as was kind of made out. And we literally were sitting there expecting that a few thousand votes here or there will make a difference, but turned out to be a huge red wave, And so I wanted to first ask Tim, what does he feel about what US has elected, and more importantly, what does Trump 2.0 mean for US and the world?
So I am excited. I'm excited that President Trump and Elon Musk are looking at the country in a new way. And it's kind of like, when you get a really successful company and then it grows and it grows and other people take over and it grows and it grows. And then that service that they provided way back when to get to be a really great company is sort of gone. And it gets to be sort of too big a monopoly, and somebody needs to come in and cut it and fix it and get it going again. I actually think this is a really interesting opportunity for the U.S., and that is that if you go, it's like every regulation you roll back will create one job. Actually, every line of every regulation that you roll back will create one job. Every job that you cut in government will create 3 jobs in the private sector. And if they cut a full, like a FDA or whatever, they cut a full department, that'll create 100,000 jobs. And I think if they got rid of the SEC, that would create about 1 million jobs. And it would bring back the American dream, because the SEC has made it so poor people cannot invest in private companies or they've made it as hard as possible for poor people to invest in private companies, and private companies are the American dream. It's you start a company, you allow the people around you to invest in it, and you grow it, and everybody benefits, and they can get rich. And that was kind of taken away from the poor people back in 1933 and 1940 because they said they were going to protect them. And I think, yeah, I mean, you get rid of TSA, you get rid of SEC, suddenly you've got a really interesting country again. So I think there is a really interesting opportunity. Now, I was still mixed on the election, but now that Trump is president and Elon is his first mate, I think we are going to see something really magical happen, and it gives me kind of a great hope. So, long live the king.
Yeah, that's wonderful to know. In fact, if anything, yesterday there was a drop in emerging markets, and I was asking someone what's the reason, and they said money is flying out of India, and I said why? And I said, is it China? They said no, it's the U.S. It's the U.S. because people are a lot of investors here, and they are kind of going back and trying to make use of the rally in the U.S. markets and U.S. stocks. So at least there are kind of like there's a lot of excitement and enthusiasm. But talking about that, let's talk about the interesting person with the X factor, Elon Musk, right? The first mate or whatever way you want to define. And you've been an early investor in the companies. So the audience would love to know how were your first few interactions? What did you see in him for you to invest? And kind of you invested both in Tesla and SpaceX. So,
I honestly think that Elon is a gift from the gods. I think the guy's extraordinary. What he's done and will continue to do for the world is extraordinary. He's incredibly bright. And the first time I met him, he was beginning, I guess, what became PayPal. And I was impressed then, and I wanted to fund him, but he took money from somewhere else. And so I didn't get a chance into PayPal, too bad about that. But then we were really lucky because I backed Martin Eberhard at Tesla. It was just one guy, and he was inventing a new kind of electric car that had lithium batteries, but if one of them blew up, it would be just a small explosion. And because he put them all in parallel. And Martin was terrific at building that first, working on that first Tesla, but to get it all to happen required Elon to come in and say, here's $10 million and I'm going to run the company. And we were going, yeah, that's going to be fantastic. And we had no idea what magic he would create. But he borrowed $400 million from the federal government. He bought the old NUMMI plant, or old car plant, for 5 cents on the dollar. He built those first roadsters, and then when he did the S-car, he just said, we're taking over the whole car. It's just going to be amazing. And then he came to us and he said, I've got this other project I've been working on, and it's SpaceX, and he had put $30 million into it. And my partner, Steve Jurvetson, just loved rockets. And I said, God, you're spending every weekend, every night doing stuff on rockets. Find us the best deal in rockets. And Steve comes back with his tail between his legs kind of and goes, well, Elon's got the best company in rockets. And so we backed him again, even though we almost never back an entrepreneur who's trying to do two things. It's much better to just be focused because you're up against competition who's just doing one thing, and they're going to win. And the first 3 SpaceX rockets, after we wrote our check, first 3 SpaceX rockets blew up. And we had faith, and I think we wrote another check, and then one worked, and that was the beginning of something really extraordinary. And when you get an entrepreneur who goes to you and he says, "We're going to Mars," a whole bunch of people think, "Oh my God, this guy is nuts." But what happens is the best scientists, the best engineers in the world, they all go, "Oh, how would we get there? I want to join him." And so he gets the best people working for him because they're the ones who are like the biodome group and the people who are trying to figure out how fast you can get to Mars, and all these amazing rocket scientists, and it's an amazing group that goes to SpaceX. And then on your way to Mars, okay, first you figure out how to take off on a rocket and then land it precisely in one place. And then you realize, oh, well, we can create a satellite network that becomes Starlink and take over the entire communication system of the world. That guy's amazing. And the brain-computer interfaces, they're helping people to, who can't speak, to communicate. And ultimately, we'll all be connected through a brain-computer interface, if you believe the Borg from Star Trek. And I just think the guy's extraordinary. And then he took over Twitter, and everybody gave him so much grief for that. He took it over. He cut the team to a quarter of the size that it was, and Twitter's growing. I think the same thing's going to happen in the U.S. He's going to cut the government to a quarter of its size, and it's going to be growing. So I think we got just an extraordinary man. We're just so lucky to have in the world. He's an inspiration for people. Whenever there are people who are sort of saying, "Oh, he's horrible, blah, blah, blah," I think that's just Schadenfreude. I think it's people who are sort of saying, "I could have done that, but I didn't," I'm not sure you could have. He really is something. So I'm thrilled to have been associated with him at Tesla. I'm thrilled to have been associated with him at SpaceX. Probably should have put money into Twitter, but we don't do too many late-stage investments. And the guy's awesome. So thank you.
Oh, that's wonderful, and thanks for giving us insights into. One more question for you, Tim, and before I go to my co-panelists, other co-panelists on this is, when we understood a bit about venture capital, most of the time in the late 90s, early 2000s, it was about that 1 hour driving distance from Stanford or 100 miles or whatever. And what surprised us is how these venture capitalists got to look at India, maybe Israel, India, and other countries. So tell us about the journey of venture capital in the US and what made you kind of look at India so early.
Yeah, I think I can only speak to my journey. And my journey was, I was surrounded by all those very wise people who said things like venture capital can't be taught, and you should only invest in a 20-mile radius. And whenever anybody says something can't be done or I shouldn't do something, I have this really bad habit of looking at it and going, how would I do that? And so when everybody was just focused on the 20-mile radius and then maybe looking at Boston, Route 128, I started to explore the world. I set up a Draper venture network with cities all around the country, the U.S., and then set up a global fund called DFJ, Draper, it's an e-planet. And we were the first Silicon Valley investor to go into China. At that time, people just thought of China as Mars. And then I was the first Silicon Valley investor to go to Eastern Europe with Skype. And both of those decisions were really extraordinary. We backed Baidu, many great companies in China, and we backed Skype. And so I think when everybody thinks something, you should always kind of go, huh, maybe not. By saying nobody could teach entrepreneurship, I thought, you know, when I had a chance, when I finally broke off from, I built this whole big institutional venture fund, and then I spun off and I decided to do it again. And by doing that, it freed me up to start Draper University and meet the Drapers and the Drapers startup houses. We have a couple here in India. And Draper Nation, which is something you should all get passports. Eventually, it'll be worth something. So when I started Draper University, it was sort of a strange thing to say I'm creating heroes. I'm Draper University of Heroes. And the first time we did it, we just sort of gathered up any 20-something-year-olds we could, and we pulled them in, and we put them through a process. And the process was what no school would ever do. We put them through a hackathon where they stay up 2 nights. We put them through survival training with Navy SEALs and Special Forces and Marines, where they get some, they call it leadership training, but I'll tell you, it also teaches people to follow or lead from behind, which is a real skill. We have them do things like, okay, you got 24 hours, get up to San Francisco, get yourself a job on paper, job offer on paper, and get back to here. We challenge them in all, they have to sell the opposite sex's underwear on the street. There are all sorts of things we're making them do so that they turn into entrepreneurs. And by the end, yeah, it's working. I think we've had something like 6,000 students through that program. I mean, we've probably taught 25,000, but through hero training, 6,000 people. They've started about 1,500 companies. I believe it's something like 6 to 8 unicorns, and then 25 companies that have reached 100 million in value, market cap. So yeah, you can teach entrepreneurship. And venture capital can be done outside the 20-mile radius.
That's wonderful to know. Let me ask Apoorva. Apoorva, you've been following the whole movement of angel money coming into the country, creating unicorns, creating sonicorns, and an enormous portfolio of 400 plus kind of companies. So when you hear kind of Tim talking about US and how you built the business and how venture capital is in India, what are you finding are the similar and different things?
Yeah, first of all, great learnings. In fact, we have been born and learned a lot from US ecosystem, especially we heard a lot from Tim and his stories in the past. We had, India as an ecosystem is a great beneficiary of, I will say, third mover advantage, because US become 1,000 unicorn economy, China has become 300 unicorn economy, and we have a third mover advantage because we pick up the best from there. And the capital was never a constraint in India, but unlocking the capital was big constraint. That's what we did in the last 9 years. And so we learned a lot how a unicorn is built with using VC money from US. A lot of my portfolio, which has 5 unicorns, they primarily from the US VC money. But in the last couple of years, the trajectory has changed. We have realized that the capital, dependence, whether it was in China or whether it was in the US, is also becoming a bottleneck for our startups. So what we did in the last 2 years, particularly, IPO in the Indian stock market is the ultimate destination for all my startups. So earlier we used a lot of VC money to build the value in the companies. Now we are targeting all our, today in the EV, almost every big company is my portfolio. They're all targeting stock market IPO because they're all bottom line positive. They're all, already created $100 million plus revenue. So these are kind of things happening because, suddenly there was, the tap of $45 billion from US, which was coming in 2021, which reduced to 25 billion and then to 9 billion, is shrinking. So our entrepreneurs here learned how to capitalize that and also suddenly find a new exit way. So that was one thing. Second thing, sir, what we learned from the US is like Tim is an investor in Tesla and SpaceX and all. The moonshot ideas should be given, the priority. And also, the entrepreneurs who have massive capability should be treated wisely, right? For example, in India, 2 years back, my proposition or my investment thesis used to be precedence-based companies, the companies which are concept, which are success in US, China, and other parts of the world. But now today I'm looking companies, like for example, I just invested in a company called, in a metal air, in EV, the most important component is the battery. Whole world is behind lithium-ion batteries. We look at India, we said lithium is a big limitation in the market. Why we invest in a lithium-ion battery? We invested in a metal air battery, which is aluminum and zinc based. So I'm investing in two of them because abundance of aluminum is there in India. The cost of making an aluminum air battery in India is significantly low compared to creating a lithium-ion battery in India. And that too, dependence is not there, right? So this company, which is, again, the precedence is there is in Israel, Finergy, which is unicorn there. We learned that Indian market, this concept suits more. Similarly, when we looked at the biggest problem in the world today is save the planet, right? Climate is killing, and one of the biggest, everybody talk about the, plastic is a big challenge. So we say, what's the solution for it? We searched and we looked at Indian solution again. We said, boss, is the biodegradable plastic solution for this? We looked at 20 companies and found 2 of them the best to create a biodegradable plastic, and we invested in them. Both of them, we invested 3 million each. And these companies, one of them making plastic from cellulose, one of them making from weeds. So the Indian, and there's abundance of weed and, cellulose in Indian market. So the creating, the making of, plastic from there is cost effective. And the market in India is definitely much larger than any other player in the world and any other country in the world, right? So the advantage of these startups of them is being in India. So when we looked at, when we are looking these startups in India, we are seeing whether these solutions are India focused or not, whether they can create the product the lowest in the world cost, and is it IP driven or not? There's going to be some IPs on that. So then our whole thesis completely changed in the last 2 years. And now we are investing in a lot of such companies which are going to shake the world. And the second part, there was time when we were seeing, if this entrepreneur is doing 2 startups, why should we invest? Now we saw that, the Blue Smart guy, the biggest EV cab company of India, which is doing 10,000 EV cabs, they started, with 70 cabs in the Uber. This was a second-time entrepreneur. He already had a listed company. He understood what is this, alternative energy base. So we backed him. And today you see, he's created 3 companies in that space, and all of them are successful. So we started learning from the experience of Mr. Musk, I would say. We started finding the new Musks in India, and we have backed at least 7 of them in India, right? So we had great learnings from US and China also. I'm not talking much about China because all obvious reasons, but I had a lot of learning from there also, right? So we always have third mover advantage, I will say, and probably at the rate at which we are growing today, we are creating double the number of new startups than US today. Our rate of which the homegrown LPs are growing is just fastest in the world, in the funds. And the way India is producing, today we have startups from 600 plus districts. Every district has at least 50 startups. We will be at least at par with US number of startups in 7 years' time. At the same rate if we keep growing, right? So, of course, it's a distributed startup economy. We have to deal it differently. And capital is never a constant, right? So we found a new way. So this is our learnings, and I hope I summarized it. Thank you.
It's wonderfully put together, and I think you've been at the heart of it. And Tim, interestingly, this is a very distributed model as compared to what you saw in the US. Apoorva, a question for you is we are producing startups, right? Question is, how innovative are these startups? And second is, are we in a position where in the next 10 years, we can create a open AI, we can create potentially, not just a unicorn, but potentially a $1 trillion company to be from India?
See, the game is of creating infrastructure of that. Indian startup growth, which we have seen, is primarily because the internet growth, which is created by Geo. You get 15 cents for 1 megabyte versus $8 in the US, right? That is the cheapest internet in the world. And I thanks to them, because of that, the smallest city in India gets internet at 15 cents, right? The AI infrastructure is very important. That's what the announcement when Jensen came here, NVIDIA guy, from Mukesh Bhai. And I can see that in the next 3-4 years, the AI infrastructure will be ready. There'll be fair chances that, I'm lucky that I have one of the biggest AI company in my portfolio. Like, we created it without the AI infrastructure, whether it is Pixis and Videoverse, all of that. But let me tell you, when the AI infrastructure cheap will be available at scale, I think it's going to come because of the announcement which recently had. The number of AI startups, OpenAI, all will come, and they will create, because, the advantage of India today is that they have already, one of the large AI IT services company. It's going to grow after the AI. It's going to grow at least 25%. And the advantage of that is you already have AI brain sitting in India, right? So the coming out, and now almost a lot of entrepreneurs, they have taken it, let's create companies like OpenAI. Let's create something like that. I'm getting a lot of new entrepreneurs reaching out to us, and I'm investing a lot in AI now. AI is one of my 20% of my investment I'm going into AI, because I can see, like the way I started investing 6 years back into EV, and I'm investing heavily on AI, because I can see, if this company comes, which is just announced, EV infrastructure will be the cheapest in India, right? If that happens, there's no reason why Indian startups in the AI will not be the global superpower.
Thank you.
No, but I think in order to get a $1 trillion business here in India, you have to say, it can't be done.
That's provocating.
And why are we still using dollars to measure success of a company? Shouldn't it be in Bitcoin?
Interesting. Especially if I go with whatever's happened to the Bitcoin in the last few days and where some of the currencies might land up in the next 10 years. So that becomes relevant. Avi, I have to ask you this question about your own kind of journey, and starting with being at Google, then being a futurist, and we discussed how futurist, is it a real job or not a real job? But now to running your company, tell us what you saw in the opportunity which made you make that switch, and how did venture capital relate to you, if at all?
When I was starting out, and mine is a deep tech enterprise-based company, at that point of time, there weren't many examples of that being done. So I knew that it would be an incredibly difficult journey. Of course, at that time, you don't realize what you're signing up for, and later on, you realize that as well. But connecting it to the entire discussion that is happening here, I can feel a lot of things are happening in the undercurrent right now, based on what Apoorva is saying, and of course, Tim. See, I immensely respect the mindset that we Indians have here. We are no stranger to entrepreneurship. It has existed for quite some time. And that dhanda mindset, I'll just translate it for you, which is like innovation, frugal innovation, and making money as well while the companies scale. So there isn't a lot of culture of burning in the money, not making profits for a very long time. And that has served well for us as a country, as traders, of different services, as traders of different technologies as well. But to move from here to the next level is where exactly the game is right now. Where Tim talked about SpaceX and Tesla, right? Somebody actually backed those guys up. Somebody actually backed those cutting edge ventures up when it seemed that it was impossible. And you see and US has always thrived on that. US as a country has always grown on that. I believe Silicon Valley was created on that particular basis. And of course, you see the mindset on East Coast versus West Coast. Today also there's a lot of difference in there. So there are brave entrepreneurs out there who are building businesses that have a longer gestation period, which are much more innovative. That maybe for the first 5 to 6 years might not make money, but they're working on cutting edge technologies that actually have the potential to be the big techs out of this region. Now we need brave investors from the other side to actually take a call on that. Rather than just saying, okay, this model has worked in US, how do you Indianize it? There is a precedence to it. There should be an existing business model. This is a category defining product. We don't know how to look at a category defining product. So, I mean, we need to pay a little more attention to what's happening out there in the markets, and we need brave investors as well. And again, this is what, from my personal journey as well, when we were raising at that point of time, saying that, we aspire to be the first big tech company out of the country. For the first 3 to 4 years, we would be putting a lot of money in the R&D, and then we would be building the product and actually going to the market to giants like Suzuki, Saudi Aramco's, Panasonic, HPs of the world. I mean, it sounded a little crazy at that point of time. And a lot of startups, what they end up doing is investment is like marriage, I believe. You should be as honest and transparent as possible. But a lot of these deep tech entrepreneurs, just to get money and just to get their businesses up and running, they represent what they really don't want to do. And that makes bad marriages. And that's what really, boils the ecosystem down. But again, if we can look at that and those innovations-based startups and we can back them up in a brave manner, I see that there's an incredible potential in the country. And based on what Apoorva is saying right now, I'm so happy that this is what you talked about and this is happening in the undercurrents.
Thank you, Avi. That was a good perspective on the other side. Let me ask a question, which probably is more relevant for Tim and Apoorva. Is the whole regulatory oversight, government regulatory oversight, is it a plus or a minus? How did US tackle it, and how's India tackling it?
It's interesting. When I got started in the business, there was not a startup in the world that ever mentioned the government. And really over the last 4 years, it's like every single startup has a regulatory plan. And it's huge friction on startups. It really slows them down. It gets in their way. And then if the government's not clear on its rules, there's always this dark cloud that hangs over these startups. So I've traveled all around the world, and I've noticed that the greatest companies in the world are with the leaders who set very clear rules, trust their people, and set them free. And if you can do that, and it's a very hard thing for leaders to do because they all feel like they have to control everything, but they don't. They just need to set a platform, like mow a green field and then let all the flowers grow. It really makes a huge difference. I mean, I guess you could use North Korea and South Korea as an example. In North Korea, they took on Marxism, They have command and control government. They tell everybody what to do. And in South Korea, they have free government, open borders, capitalism, democracy, just as free as you could, as almost as any country. And it's been a 70-year experiment. There's that demilitarized zone between the two countries. And nobody from North Korea crossed, nobody from South Korea crossed. And what's happened? Well, the average North Korean makes 460 times, including with purchasing power, so the average South Korean makes 460 times what the average North Korean makes. And the average South Korean now is 4 inches taller than the average North Korean. The average South Korean female is taller than the average North Korean male. They're starving. The government, it's like, do I really have enough wisdom to tell, in this country, 1.4 billion people all exactly what they should do with their life? I don't think so. I think that freedom and that trusting people to do the right thing. If I fund a company and I say, here, I'm giving you some money, but you better not do this, and you have to do this, and you better do this, and, and I'm not so sure, you better not take this money, whatever. And you know what you're going to do with it. You're going to do everything I expect you to do, which is you're going to run away with the money or whatever. But if I tell you, I'm going to give you some money, I trust you, you are going to make this thing into a monster success. I don't think you're going to stop until you're a huge success. You're going to go off and you're going to do everything you can to make that company successful. And I think that is true both on the country level, on the company, on the startup level, and on the big company level. The people who set very clear ground rules, here's where we're going, this is our plan, and here are the rules you have to live by. And then we trust you, and we are going to set you free and let it rip. And sure, if something horrible, terrible happens because of some corporation that does something nutty, sure, then you say, okay, I think we're going to have to add a rule. But probably not until after all of that. Now they're trying to anticipate every possibility of something going wrong. And that is awful. I mean, we got AI. It's amazing. It's fantastic. And what are government people doing? Ooh, how do we regulate that? How do we stop it? I don't want people to be able to know, why toenails grow. I don't want people to be able to explore the world and understand the knowledge of the entire world. That's what we have. That's what we have in AI. We have the knowledge of the entire world. All the people on the planet who've at all participated in the internet is now available to you on Perplexity, ChatGPT, and if you're a scientist, Consensus, if you're a doctor, Consensus. We're really this is a magical time, and the regulators, they regulate. It's like if you're a foot doctor, every foot has a problem. I think we just need to be set free. Set the rules. Let us rip.
Nice. Apoorva, what do you think about
I
India?
think this innovation and disruption is directly, I will say, inversely proportionate to the regulation. Until and unless, anything which impacts your economic interest of a country, the regulation should be discussed with the startups before we execute it. Because, otherwise, if you regulate everything, innovation won't happen, right? Like the way Tim is saying. And so many times what happens, these startup founders, they come out with totally new ideas, right? The rules and regulation don't exist. And for example, invest in a company called Beyond, which is supplying internet to, Juggy Chopra's, slums. There was no regulation. They wrote the regulation, discussed with the government discussed with them, come out with a. So, all these things which are very important, and these are innovative ideas, some 99% they won't fall into the current regulation, right? You have to create regulations for that, and that should be discussed through various forums like TiE and, with the entrepreneurs, and then should be taken. So that's what my experience is. A lot of sectors like P2P in India, they got impacted. A lot of fintech companies, there was 39 unicorn given by fintech sector. Suddenly there was regulation in P2P and many other sectors, subsectors. It started impacting the best companies, which are $500 million companies, can you imagine? And suddenly the value is gone down to zero, So I will say, if a sector has given you 39 unicorns, at least you should have a dialogue with the entrepreneurs and come out with the common ground so that your regulations are not impacting the value which is already created to the country.
That's great. I'm going to talk a bit about venture capital as an industry, right? And traditionally, US has had venture capital delivering, a lot of good funds delivering 30% plus returns over a longish period of time, which made them have a good anchor support from institutions and others. However, these returns are, and we, Apoorva and I were at an event in New York earlier this year, where there was a very clear discussion that in India, venture capital does not deliver as much, right? In fact, a lot of people came out and said venture capital doesn't even probably deliver what sometimes public markets deliver over a long term. So the question I have is, what are we looking at? I mean, one, in the US, what's a par return for someone who's investing in a venture capital fund? And likewise, I'd ask Apoorva that question. What is his view on what is a par return for venture capital in India over the next 5 to 10 years?
So I don't think you're giving India enough time. Companies, what happens in venture capital is you make an investment, early stage, like what you and I are doing. You make these investments in a variety of different companies, and then a few of them really start to take off, and they hit 10 million in revenue. And then 5 years later, they're at 100 million in revenue. And then 5 years past they're at $1 billion in revenue. And then another 5 years and they're at 10 billion in revenue. And it's, you require a lot of time before you can start looking back and saying, hey, look, we got a winner. It's a very patient business. I make an investment. I don't really expect it to really take off for about 7 to 10 years. And when it finally gets to maturity, they usually go, actually there are fits and starts at the beginning, and then it goes like this, and then they sort of flatten out. They grow a little slower, flatten out. Before it starts flattening out, you've got many, many years of doubling and doubling and doubling in the big winner, and that skews the IRR really heavily. And so I think you're just not giving India enough time. India, my dad was the first Silicon Valley venture capitalist, first Indian venture capitalist ever. And that was probably 25 years ago, something like that. I mean, you haven't even had 2 cycles yet. So this is brand new here. Stick with it. It's going to come. You've already got unicorns. Not as many decacorns, not as many, what do we call them, chimeras when they hit $1 trillion. So when you hit $1 trillion with just one company, all the boats rise with that baby. And the returns become extraordinary. And so I would not underestimate a seed venture capitalist in India. I think they're going to look bad. They go through the J curve. They're going to look bad for years. And then all of a sudden you're going to go, wow, I was really smart to invest in this guy or girl.
Apoorva?
See, I tell you, globally and India, it's the same story. Not more than 10% venture capital make money, right? And studies are there in Stanford, everywhere. And they don't make more than 2x. There are very few funds globally who make, even in India, more than that. And the reason why it is, and I'm just doing a blind shot, because, you know, like incubator, accelerator, there's massive evolution in the business models, etc. there. Every industry around startup ecosystem has grown, startups have grown, but the venture capital is working on the same model 220 from so many years, right? And there is no evolution on the venture capital model or operation on the business model at all, right? And the country is like India, which are very small, like Tim is saying, you know, they are just in the first or second cycle, not even 1,000 VCs investing properly here, right? You know, unlike US, you have so many venture capital funds, like, and there is enough opportunity to create exits also. You know, in this country, you have to have better business models, better operation model for the venture capital funds. Although I'm not the authority, IVCA is authority here and some a couple other guys, you know, but you know, as an entrepreneur who is doing venture capital here, it's frankly, it's, you know, very, you know, even if you make 2x here or 3x here, you're exceptional venture capital company, right? Because the business models don't allow you and, you know, to do that. That's number one. Number two, you know, as a startup, as an asset class, I think only last 2-3 years, they have seen the clear exit paths. It was earlier only M&As in few sectors, which still exist. It was only the global capital, which used to create a lot of exits for our existing investors here in the venture capital. Now you have the new system, which is IPO. I think now you have a clear paths for the exits for, you know, even for the venture capital funded company. So the venture capital funds will grow, and in the new crop, I will say in the next 7-10 years, you will see the VCs here making good returns, if not more than at least the par of US VCs.
I think the capital markets opening up in India still continues to be a unique place in the world where capital markets are that open and are providing very healthy exits. And surprisingly, a lot of that is coming out of local capital, right? These are HNIs, local capital, mutual funds, which are funding that as opposed to the international growth funds. But Abhi,
Can I add to this?
yeah, please go ahead.
See, from a founder's perspective, there are a couple of more things that I would like to add to this, and I completely agree with both what both gentlemen are saying here. I would also like to highlight the risk appetite as well. In US, probably as much as I have explored the ecosystem, the idea is to focus on big bets in terms of how much money can I make. And here, I'm not talking about, again, cannot represent the whole investor community in a blanket statement, but many of the investors, they they think more from the perspective of how do I not lose money, right? So why there is a 2x return, 3x return is because that is exactly what investors are looking for. That, you know, I'm okay if it doesn't make 100x, but, you know, I should not lose money at the same point of time. Whereas, I mean, we should think of the upside in terms of how much money we can make. And again, I cannot comment on it again because I'm not a VC, but just again from founder's perspective, maybe some of the companies we should look at that 90% of them are going to fail, but that one company should have the capability of making 100x or, you know, maybe more. And if we start looking at things from that much more perspective, I think that would help. Secondly, even from the founder's perspective there, we need to also allow for pivot to happen. A lot of these companies that have been successful in US have pivoted their business models. So YouTube started as a dating site. Twitter, if I'm not wrong, I mean, it was podcasts, Netflix, all of us know that CD rental and everything. So you need to have that gestation period to allow for many of those pivots to happen as well. Because entrepreneurs are as committed on making it a success, if not more, as the investors there. Yeah.
That's well put, and there was someone who just gave me numbers which I have not fact checked, But InfoEdge, which is one of the leading kind of investors in venture capital, early companies in India, invested as much as 3,000 crores, and their current value of portfolio is in excess of 40,000 crores, with companies like Zomato and otherwise. And out of 180 of their investments, 100 have been written off, right? So I think nothing in life comes with so much caution that, and that's the mortality rate. And still, despite that, they've kind of done what they've done. So you have to be ready for that. And if a venture capitalist is not ready for that, then your returns get, they revert to the lower end. And unfortunately, that coupled with the fact that a lot of venture capitalists have not thought through exits properly are the two reasons I can ascribe to venture capital as a movement needing a bit more. Anyways, I think we've had a lot of time here in the panel. Would love to see who in the audience would like to ask us questions today, and for any of the panel members. Yeah, so let's start with the table here. Suril, you want to kind of begin?
So, Twyn, often, VCs are seen as one-shots, right? And they're circling around for profit and things like that. But you see it more as an adventure, right? So, what's your boldest move yet in transforming the venture capital from a predator to a partner? What's your boldest move you've made so far?
I've always loved the entrepreneur. So my boldest move, I actually think the school and the show are really showing the beauty of entrepreneurship. The show shows the beauty. The school trains people to become entrepreneurs. It is true. I do look at it as an adventure. And I think in order to look at it as an adventure, a venture capitalist has to do what was suggested over here, which is instead of thinking of, I can't lose money on any of my investments, think about how high is up. How great could this be if it is successful? So, and what is the world going to look like if that is a great success? Are we going to be on Mars, or are we going to be driving around in electric cars, or are we going to be in flying electric cars, or are we going to be, what's the world going to look like? Are we going to have our bodies completely handled by robots and taken care of by data? Those are all great futures, and so I'm always sort of thinking of the future. That's kind of where I go. And so I never think of it as a bold move. I just think of it as life and being willing to fail, because a lot of investors, not entrepreneurs, but investors don't know what failing is. They were straight top of their school students. They did extraordinary things. Everything was exactly right. So I kind of would blame education there. The education to be, instead of just like, hey, let's all learn cool stuff and explore and see, because teachers don't know everything. Let's think of this as we're all helping each other get better off, as opposed to the way schools are set up now, which is like, well, if I'm going to get the A, I got to make sure these guys don't get it. And so somehow none of us learn from that. None of us benefit. And failing is just a part of it. And I've learned over the years, I think this was a lot harder for me at the beginning, but I've learned over the years that when a company fails, to just say, thank you. You moved the ball forward, you gave it a good shot, and not try to fight for that last piece of cheese. You don't want to be all the mice at the grabbing for that last piece of cheese. You want to just sort of go, okay, that one didn't work out. It's still tough, but so, I mean, bold moves. I backed the guys at Skype. They were outlaws. They were not allowed in the U.S. I backed I was the first Silicon Valley investor to back any company in China. I backed the first Eastern European company in Skype. We were the first venture capitalist to advertise ever. I think we were the second one to ever talk to the press. We were the first ones to start investing outside the U.S. These are a lot of different bold moves. We're now, as far as I know, the first venture capitalists who are using AI in our decision-making process. We're doing lie detection. We're doing industry evaluation. We're doing people evaluation. I have a digital twin who's doing PR for me and for those companies. We record every conversation and we check back and we look back and forth through AI. And so I think bold moves are just, now I've also done some really stupid things. And I was the first to do all those stupid things. And we don't have to go into those because that we wouldn't have time for.
Good. Maybe have the lady here.
What are your biggest hurdles when you do business in India?
What are the biggest hurdles when I do business in India? It's a good question. I haven't had a lot of them. Because what I do is I fund the company. The company has a lot of hurdles. We do try to get them to be Delaware companies because if they're Indian corporations, there's usually something funny. And I remember my dad had a lot of hurdles, but he was 25 years ago. He had this company that was this great success, and all of a sudden India created a new rule that said an American can, and he had 40% of it, an American can't own more than 25% of an Indian public company or whatever, success. And so he immediately had to sell it to Goldman Sachs India, just like at a huge discount because of that rule. Also, the tax system's a little bit nebulous, it's a little confusing. The regulatory thing is a little confusing. What they've done with Bitcoin is like, no, you can't do it. And then the Supreme Court says, oh, you can. And then they say, well, but you can't buy it here. You're allowed to sell it because we get taxes on it, but you're not allowed to buy it here. Clear rules really make a big difference. Very clear rules, and then trust the people, set them free, let us know, and make the rules simple enough so, people who aren't so bright can participate in the game.
Sir, you had a question here.
Yeah, my name is Dr. Harsh Sethi from TiE Mumbai. We are into renewable energy. My question is, with the new government in place, what about the IRA, Investment Reduction Act, and how would it go? Because the new policy is drill, baby, drill. And earlier was IRA, wherein America was supposed to be one of the biggest markets for renewable energy, at least in solar. And other question is about the regulation policies. So normally, innovation is the mother of necessity. And with the regulations in the solar by Indian government for DCR and ALMM, there have been a lot of innovations by the Indian industry in solar, which has helped the country. So in a way, regulations do help when there is a necessity to have energy independence in India. Just your take on that. Thank you.
You want to take it first? Go ahead. Oh. Okay. So the regulations usually help the biggest corporations in the industry. They don't help the startups because the startups have to live by that same regulation, and the regulations are usually hugely complex, and they make for a miserable situation for a startup. They have to hire all this overhead. They have to do all these things. It doesn't work. In the energy industry, in general, am not a fan of subsidies. I'm not a big fan of like government taking taxpayer money and then deciding where to put it. Oh, okay, we've just decided we're going to all put it over here. And the taxpayers are going, wait, what happened there? I'm not a big fan of that. there are times, you could argue that there were times where when the government put the pedal down, when they saw that, hey, we invented a car and we need clear roads going across the country, where the government would buy up land to do that, it made some sense. But it turns out that the farmers were already doing it themselves. So maybe the government just impeded the progress there, but they took credit for it. I'd be very circumspect about things. Regulations do, you think it's a good idea. It's like putting a Band-Aid on an infection. Having a new regulation is putting a Band-Aid on an infection. It makes it feel better for a moment, or at least you don't have to see it. But then it infects and it kills the corpus. So, yeah, I'm not a big fan.
Yeah, I think, the regulation has both plus and minus side, right? It brings sustainability to the business, whatever business you do. I totally agree with you. But the space, especially when you're doing very innovative startups, when you're doing very, disruptive startups, it has to be consultative, right? Because, I'll tell you why. Most of the entrepreneurs who are doing startups, they come with all their life savings and do the business. When they create a value of 500 million, suddenly there is a regulation which brings it down to zero. It's a huge loss to them also. Similarly, economic loss also to the nation. That's why I say, it should be consultative. There are cases where, it has bring a lot of clarity and sustainability. The regulation has really helped in various industry. But there are, forums, and I think entrepreneurs should be there on some of the aspects which are completely new, especially to the ecosystem.
I think just to add one more thing is, one thing which gets ignored sometimes is the government investment in digital public infrastructure in India, and how that has impacted positively the way startups have taken from that and used it is just exceptional in the Indian context, and those stacks have been very useful. We have time for one last question, unfortunately, and then we can then maybe I can go to the last table. Yeah.
And while, of course, there's a lot of conversation saying that people should be happy to write off a lot of their investments before the real returns come in, the reality is that individuals don't have that ability, actually. And I can speak, I've invested in 40 startups, and the reason I moved to the LPs is fundamentally because I feel there's a lot of mis-selling, fundamental information rights are not there, and I think, forget about external regulation, I think the angel investing world needs self-regulation, actually. Any reactions to that, please?
Apoorva, do you want to take that? I think this is right up your sleeve.
So I'm actually part of Angel Fund Committee of SEBI. I'll tell you about India especially. As an angel investor, first of all, I think a lot of education is required. And every angel, I say, that must attend something like Draper University or maybe some courses which are available. Because what happens, what you hear from entrepreneurs or you hear from angel networks, ultimately it's your individual decision as an angel investor. So it's important for you to have some education on that side to avoid mis-selling, right? And I want to tell you that, this mis-selling, there may be multiple reasons, because sometimes what we understand and sometimes what they present, there is a gap there. Second point is, when it comes to the regulation of angel, there's already angel fund regulated by, we have 3 licenses regulated by SEBI. SEBI is already regulating angel funds in India, right? That's a way how angel networks, everything has to be regulated by. So that is already in place, right? So that is number one. When it comes to your other funds, of course, all of them are regulated by SEBI, right? So, when it comes to, and remember, India is in early stages of angel fund also. There may not be more than 300 angel funds as of now, in India.
So also, as Apoorva said, it's a lot of misrepresentation is there given that, but also there's a lot of misunderstanding also that is there on the investors' end. So sometimes what the founders are actually presenting is not what is actually being understood. There's also a lack of tech due diligence that I would say. I've always seen angel networks do financial due diligence, legal due diligence, but the decision of today's investments are based on tech, and the tech due diligence probably never happens. And I've, if I, every time an investor would ask me, what is your monthly, month-on-month user ad? If I had a penny for that, I would not need to raise funds. But imagine being an enterprise startup, which is barely targeting 5 customers. We have customers like Saudi Aramco. We have customers like Public Investment Fund of Saudi. We have customers like HP, Samsung, Suzuki. We can't add month-on-month customers in that. So the moment an investor says that, I immediately take it as a red flag that, okay, they probably don't understand our business model. So there's more of miscommunication on both of the ends rather than misrepresentation. And there will always be those 5% people who will misrepresent. And I would, if Tim wants to touch base on the point, similar, one of the largest cases of this also happened in the US ecosystem. If you would like to address the medical venture, if up to you.
So I didn't get all of that. I want to address what the...
Theranos, yeah.
Oh, God, this will be fun. Okay. I was amazed that I was really the only person who defended her. She didn't even defend herself. I mean, that was just ridiculous. It's really interesting that an entrepreneur, the way an entrepreneur looks at the world and talks, is usually in futuristic terms. So as an investor, I have to read the tea leaves. I need to understand what the entrepreneur is really meaning when they say, I got this deal. When they say, I've got this deal, it usually means, I think I'm going to get that deal done, and we've had conversations, and it looks good. And that's actually true of any salesperson. They always promote and they tell everybody. That was the only thing they got her on. Nobody got hurt from the thing, so they couldn't prove that. And the only damage were some very sophisticated investors who were really embarrassed that they came in at the top and it went down. Now, she came to me, 19-year-old girl, she said, I'm dropping out of Stanford and I'm going to change healthcare as we know it. Okay, healthcare in the US is a mess. It's all, it's all driven by insurance so that there's no natural predator on healthcare. It just keeps getting bigger and more expensive. And the life span of an American has now dropped for the first time in ever. The average American lives about, I don't know, a year less than they did 5 years ago. Even though we're spending more and more and more and more as a percentage of health. So I thought, change healthcare as we know it. She's got 2 or 3 really good ideas. She's going after one very clear idea. Small drop of blood goes into a microfluidic chamber. You measure that blood, and you can run multiple tests on just a drop of blood. And so that's the vision. So you have to separate the vision from what she actually accomplished. And I think I think you hit on it. It's that there is a communication gap between the entrepreneur and the investor, and there is also a communication gap between the venture capital investor and the limited partner. The limited partner is usually thinking, I want to keep my job, and when they talk to me, this guy is crazy, so why would we ever put money behind him? Whereas, and a venture capitalist looks at an entrepreneur and says, this is promising, but they're counting on the entrepreneur to say exactly the way things are. As a venture capitalist, I have learned to ask the second question, the third question, the fourth question, to finally get the truth out of the entrepreneur. The now truth, not the future. The future truth is there for you to see. And she was a great visionary. She was a fabulous scientist. She started something. Now there are 15 portfolio companies. I mean, there are 15 companies that have come to me looking for money, doing exactly what she was doing. She was way ahead of the crowd. And pioneers, sometimes they get the arrows in their back. She should not be in jail. That makes no sense, period. Just because some mad investor decided that he had to prove that it wasn't his fault.
I totally support what Tim is saying. And I give you last example of India, because he touched healthcare. 3 years back, I heard somebody pitching to me from Indian Institute of Sciences, 2 scientists, saying they are, in the body, liver is the only organ which can be reproduced. They said, we are creating artificial liver. I wake up and then I said, okay, let's listen to that more. Gentlemen, this for you, angel investor, 40 companies. So I said, boss, impossible. First word came out of me. It's impossible to do it. I invested 3 crores in that company, even if it was an impossible idea. They got animal trial successful in pigs. I said, let's go and meet these guys. I've not met these guys. And a few of my angel investors flew to see how this backpack is working, if it's working, right? And Vikas Kapoor, some of the angels from it, they visited them. And they called me from there, Dr. Pur, this is really working. This backpack is really working. And this is successful in the pigs. And they got but they need a little bit more capital, maybe 4 crore more. And it's around $50,000 or something. I said, fine, we give them a little bit more money. If they would have not been successful in doing so, they would have been mis-selling to me, right? But because they are now got the human trial successful, permissions in AIMS, suddenly institutional VC funds come and fly and they're investing in them. Now this is not a mis-selling, it's now reality. Guys who are working and developing companies, normally it is an impossible concept. That's why they create Tesla and SpaceX. Otherwise, they are all mis-selling sometimes, So we are lucky to have entrepreneurs like them to back them. And I believe that, we'll be successful only 20-30% cases, right?
I think we'll round up the discussion and Avi can give your comments, yeah.
So the reason why I brought this point is only for you to address that sometimes it's not misrepresentation, it is also miscommunication. That's why I precisely brought
No, it's a very, very, very valid point. And I would say that, sorry, we don't have time for questions. I'm so sorry.
Yeah, it's very important. Just come yesterday, I just wanted approval.
Okay, are you talking to the angel fund and the amounts? Yeah. Yeah, we should discuss that offline because that was my question to him as well this morning. But I think in my mind, when I first tried to see what entrepreneurship is, and I think there's a very thin line between lunacy and entrepreneurship, because for a lot of reasons you should not be an entrepreneur. For most reasons, as Tim said, people come to you and say this is not possible, and you literally have to prove it possible. So there has to be a streak in you which is probably close to lunacy, or you have to have an ability to jump off the cliff with the parachute not being ready or whatever. So entrepreneurship is that, and while I would say by and large entrepreneurs mean what they say, we at TiE have taken Anish advice here, we've taken a very serious view on where there are governance lapses, right? Institutionalized governance lapses where people misreport numbers, right? Or things like that, which are very clearly kind of like, mis-selling or worse order than mis-selling. So those are things which have to be treated very differently from, kind of an entrepreneur trying and failing in the process and being honest about it, you know. So anyways, thank you very much for a very engaging session, Tim, Apoorva, and Avi. Thank you.
Folks, I know we are running late, but we will regather in this room from 11:20 onwards. The camera folks will need a little time, so there's tea, coffee there. Before that, we have a small little thing from Bombay. Sorry, Mumbai. Sorry, folks. Hello. Maharashtra election, sorry.